What if I told you that your Bitcoin could be making money every single day, even while you sleep, without you having to sell a single Satoshi? Most Bitcoin holders just buy and hold, hoping that the price goes up. But what they don't realize is that their Bitcoin is basically sitting there doing nothing, like having cash just stuffed under your mattress. I'm about to show you how to turn your Bitcoin into a money-making machine that generates income 24/7. We're talking about earning 40 to 60% per year on your Bitcoin while still keeping all the upside if Bitcoin goes to 200 or 500K. Now, I've personally tested, along with my clients, every Bitcoin income strategy out there, and I'm going to break down the top methods for you. But more importantly, I'm going to show you the one strategy that combines all of them into what I call the Bitcoin income flywheel, and it's absolutely crushing everything else right now. Let's dive into how it works. You see, most people just buy Bitcoin. It sits in their wallet and it does absolutely nothing. It's the equivalent of buying a rental property and never renting it out. And yes, this strategy does make them money over time, just like you could make money in real estate. I mean, if we look at Bitcoin over the past couple years, it's seen returns all the way from a low price of $16,000 in 2022 to a recent high of $125,000, nearly a 10x return. And again, 2022 seems like a long time ago, but that was only 3 years ago. And getting a nearly 10x return over the course of 3 years is pretty good. But guys, it's okay to want more money. It's okay to want to compound your wealth faster, because while these are good returns, they could be better. Your Bitcoin could be working for you while you wait for those price increases. If we dive into the past year, you'll see that there's a lot of periods where we see very, very slow growth or even declines in price. Like over here, going from $104,000 all the way down to roughly $76,000. That was a perfect time to accumulate Bitcoin. Not just buying, but actually using your current Bitcoin to accumulate more. Over here, when the price is chopping sideways or even going up, that's another great opportunity to accumulate more Bitcoin using your existing Bitcoin. And I think we all know that Bitcoin is a volatile asset, so why not make our risk toward ratio a little bit more healthy and a little bit more in the reward favor by generating additional income on our Bitcoin? That way, we are lowering our cost basis over time for our assets. So if just holding Bitcoin isn't maximizing your wealth, what should you be doing instead? Well, there are actually several ways to make your Bitcoin earn money for you. And in other words, earn more Bitcoin. Let me break down the main strategies, and then I'll show you how to combine them all into one powerful flywheel system. The first strategy is going to be Bitcoin lending. Now, unfortunately, using DeFi, we can't just lend out our Bitcoin. We have to use a wrapped version of Bitcoin. These are backed 1-to-1, right? So for every one wrapped Bitcoin in circulation, there is going to be one BTC backing it in cold storage. But as you can see, this is not very appealing. You're getting about 0.02% on your wrapped Bitcoin over here. And even other markets, you're getting upwards near 0.5% at most. The thing is, Bitcoin is just such a large asset, you can't really get good returns just by lending it out. The only reason why somebody might lend out their wrapped Bitcoin is because they want to be able to borrow against it. More on that a little bit later. The simple description of just lending out your Bitcoin is like being a bank. You're lending out Bitcoin that other people are going to borrow. The good here is it's safe, right? Lending platforms are very, very safe because they are very, very simple. Sometimes they have pretty predictable returns, but in this instance, the returns are just very, very low, which dives into the bad. We have lower returns. Your Bitcoin is locked up somewhat, right? So if I supplied Bitcoin right here and then withdraw it like let's just say a couple hours later, it'd probably be fine. But in the instance where, let's just say, more and more people are borrowing Bitcoin, there's the instance where maybe I can't get my Bitcoin out because so many people are borrowing Bitcoin. But in this instance on Bitcoin, you could see that there's roughly 44,000 Bitcoin that's being supplied and only 3,500 Bitcoin that is being borrowed, meaning that we can get our Bitcoin out if we need to. The next strategy is going to be done for you vaults. This is basically where professional managers invest your Bitcoin for you. They go out and they find all these different Bitcoin strategies and they handle it, and in turn, they take fees, right? Simple as that. It's like having a financial advisor for your Bitcoin, except the financial advisor does everything and you keep custody. Now, the cool thing here is this is hands off and it's done by professionals. The bad thing is sometimes this is negative. So as you can see right here, the 30-day moving average APY of this vault is negative 7.7%, meaning it costs you money to be in this vault. And typically these vaults will turn negative whenever there is a high amount of volatility in the market. So you can see over here on August 13th, the APY was on average about 6%, not bad. And then it went down to roughly 4 to 3%, right? But then when volatility picked up in Bitcoin on August 18th, if we just refer back over here, you could see that's where we started to see an immense amount of volatility that started to become a little unmanageable. We were going up, down, up, down, up, down, which causes these strategies to fail in that essence. And then we have liquidity pools. This is where you're essentially putting Bitcoin into a pool with another asset and you earn fees from every trade. So you're enabling other people to trade between two assets, right? So if we were to do, let's just say, wrapped Bitcoin and USDC, we're enabling people to trade wrapped Bitcoin for USDC and trade USDC for wrapped Bitcoin. And then we're going to earn a small trading fee every time that there's a transaction. It's like owning a piece of a Bitcoin exchange. And the good here is you can get higher returns, 30 to 50% plus, right? And you still have Bitcoin exposure. The bad is obviously this requires a lot more knowledge. You need to know what you're doing because there are things like impermanent/divergence loss. And that's essentially where a bunch of people buy your Bitcoin. You end up having 0 Bitcoin anymore, and you have a bunch of USDC because that's what they gave you. Or vice versa, which in this instance isn't necessarily a bad thing, but everybody essentially steals your USDC because they're selling Bitcoin, and you're the one that's buying Bitcoin on the way down. But you can see that we have pools like UBTC paired with Hype doing about 80%. Hype is a pretty large asset. We have BTCB with ETH doing about a 23% return. And once we dive into these liquidity pools, we can actually get higher returns than what's displayed over here because we have the ability to adjust our min and max price, which is essentially the area that we're providing liquidity. And in this instance, you could see that we could get roughly about a 60% APR with maybe week-to-week management and having to just play with this and adjust this every week or so. Now, each of these strategies work well on their own, but what if I told you there's a way to combine all 3 of them into one super strategy that maximizes your Bitcoin income while minimizing your risk? That right there is going to be the best strategy. But before I reveal this Bitcoin income flywheel strategy, I need to share something very, very important with you. What I'm about to show you is the exact system I've been using to generate consistent income from my Bitcoin for the past 4 years. But more importantly, it's the same strategy that's helped thousands of Bitcoin holders turn their dead Bitcoin into income generating assets. So as opposed to just letting your Bitcoin sit there idle and hold all the way up, all the way down, all the way up, all the way down throughout these markets, they can generate cash flow and use that as a way to take profits. Now, I made a YouTube video a couple days ago. It's called the DeFi Portfolio Optimization System, where I break down this entire Bitcoin income flywheel strategy and how you can actually implement it step by step in plain English. The link is going to be at the top of the description. So after you watch this video, go ahead to that one, check it out. And I just want to clarify, it's not a complicated trading system or risky gambling strategy. It's about turning your Bitcoin into a business that pays you dividends every single day while you get all the upside if Bitcoin continues to go up in price. Now, step 1 of this strategy is going to be to lend 70% of your BTC. Now, here's the thing. When we lend, we are only getting a return of 0.02%. It's not really worth it. And sure, some places we could get a little bit higher, but still not really worth it. But when we lend 70% of our BTC, we can now borrow against it. And for simplicity purposes, I just want to assume that we have about $100,000 in Bitcoin that we are going to be using for this strategy, which means about $70,000 is going to be lent. We're going to revisit this a little bit later on. Now, the other $30,000 we are going to invest into done-for-you vaults. I know at recent times over the past couple days, these have a annualized APY that is actually in the negative, but remember, this is an annualized APY. And of course, all the other times that they are in the positive make up for it. But that's also why we limit the exposure to $30,000 instead of the full amount. This right here is going to do a return of about 7% per year. Now, it seems great, but how can we get higher returns here? Is it really worth the risk that we're taking on, right? No, in this instance, until we start to borrow against our Bitcoin, right? So we're going to borrow a reasonable amount against our Bitcoin, but we are not going to borrow something that's going to cause us to get liquidated very, very easily. And the reason why is because we don't want to just lose our collateral, right? Because of course we got liquidated. Currently, Bitcoin's at $112,000. If we were to borrow at about a 40% loan to value ratio, and Bitcoin were to essentially lose half of its value, so it goes to about $60,000 or so, right? Then that's where we would get liquidated, right? But we'll still have time between now and then to obviously repay borrows and stuff like that. So I would be targeting a 40% loan to value here. What that means in layman's terms is we're just borrowing $28,000 against $70,000. Now, when we borrow this would be a fixed USDC borrow. And when I say fixed, I mean the value of the borrow isn't going to go up or down. Our collateral will, but our borrow USDC will not. This is actually going to cost us about 5% per year to borrow, so it's important to keep that in mind. But we are going to be investing it into strategies that do a lot better than 5% per year. Now, this CBBTC to USDC strategy over on the base network for Uniswap is currently doing an 82% APR. When we bring in $20,000, it's doing about a 76% APR. It gets diluted a little bit because we are bringing in a lot of liquidity. And guys, there are a plethora of these opportunities out there with $1 to $2 million in liquidity that are just waiting for people like you to deposit in there to start earning their Bitcoin. The cool thing is we are using the borrow to essentially invest into liquidity pools, which means we're not going to have to worry about the impermanent loss as much. Emphasis on as much, because it could still bite us if you don't know what you're doing. So that's $20,000 doing a 76% APR, and then the other $8,000 is going to go into a market exposed strategy that's correlated to Bitcoin. So when we're looking at these, we want to look for the highest correlation to BTC. And in this instance, we have a CBBTC and CBXRP liquidity pool, which is just a wrapped version of both Bitcoin and XRP by Coinbase themselves. Once again, on the base network, this time on Aerodrome, and it's doing an 82% APR, which is where our other $8,000 is going to go. And again, depending on when you're watching this video, these strategies could be completely different, so do keep that in mind. Now, when we do the math, our $8,000 over here is making $65.60 per year. Our $20,000 is making $15,200 per year. It's costing us $1,400 per year to borrow these stablecoins. We are earning $14 per year on our $70,000. But again, the borrow is what matters here. And then our done for you vaults are doing about $2,100 per year on $30,000. Bringing that to a running total of $22,474 on our overall positions, which when we equate that to a return on our actual Bitcoin, that is a safe 22.4% per year because we are doing $100,000. Now, if you wanted to ramp this up, you could essentially take this $30,000 over here and invest it directly into these liquidity pools. That's what I would do if I wanted to ramp this up. Now, I would go and invest it all into things that are correlated to Bitcoin. So that 30,000 wouldn't even touch the Bitcoin to USDC pools. It would touch the ones that are Bitcoin paired with another crypto asset, but that crypto asset moves up and down with Bitcoin. And the reason why is because that's going to lower our impermanent divergence loss, right? And when we do the math on there, we're doing about a 45% APR on our overall $100,000. Once again, more risky, but also at the same time, higher rewarding. So here's what most Bitcoin holders don't understand. You don't have to choose between earning income and Bitcoin price appreciation. You can have both using these strategies that I just showed you today. So while other Bitcoin holders are just sitting there hoping that Bitcoin goes to 200K, 300K, right? You could be earning $40,000 to $60,000 per year on every $100,000 of Bitcoin that you own. And if Bitcoin goes up, that income per year is also going up. Now, if Bitcoin does go to 200K, you still get all of that upside too. So this Bitcoin income flywheel strategy isn't just theory. I've been using this exact system for 4 years. My clients have been using this exact system for the past 2 years that we've been in business, and the results speak for themselves. Now, again, this opportunity won't last forever. Yes, there will still be Bitcoin liquidity pools, Bitcoin borrowing, managed vaults, stuff like that. But of course, these returns will get smaller and smaller and smaller. Right now, you're still early to this approach. DeFi is a $250 billion industry compared to the $4 trillion crypto industry that it's in. So it obviously has a pretty large total addressable market, but at the same exact time, we just have not seen that adoption quite yet. So with that being said, make sure to click on the video on screen right now. It's going to break down this strategy and how you can actually implement it. I'll see you guys in the next one. Peace out.